A very good evening to you all, friends. I'm Sanjeev Singhal, Chairman of the Auditing and Assurance Standard Board and Vice Chairman of the Committee for Member in Industry and Business. I welcome you all to this 114th program of the AASB for this council year. Friends, today's topic is again a very, very important topic on audit trail. And before that, friends, I would also like to apprise you that recently Institute has approved an audit tool called Any Audit, in which the first three users and up to six audits, there is a free trial that you can avail to see whether the software suits your requirement or not. There are significant discounts for small audit firms. I would highly encourage you to kindly, take a trial of the tool, and if you found suitable, then you see this for your documentation purposes. Friends, we have also issued a checklist for disclosure and templates for the working paper. Kindly make use of the same. Friends, now let me come to the topic for today. Today's topic is audit trail. It is a very forward-looking reform whereby the companies are required to keep an edit log of the changes that have been done. Already all the listed companies have complied with the same. The auditors have reported on the same. Now it is the turn of the unlisted companies. And it will be the first reporting of audit trail because this was deferred for 2 years by one year twice. So as auditor, we must make sure that we follow the law of the land, we comply with the law of the land and report any deviations. As I said, this is a very forward-looking step. This will bring in transparency in the financial statement, and this will require the companies to maintain that financial discipline. We have two very esteemed speakers to deal with this subject, CA Nitish Moore, who has been the chairman of the EIRC, and CA Deepa Agrawal, who is a special invitee in AASB and has taken many sessions on this topic. And we have two very young moderators, CA Kishan Bansal and CA Kanika Garg, who will be posing your questions to both the esteemed speakers. Friends, I sincerely thank all of you for taking out time and staying abreast of the latest in the field of the auditing. Auditing is the lifeline of our profession. Keep up this spirit. Thank you very much. With this, I thank both the speakers and the moderators and may now invite CA Kanika Garg to start the deliberations as a moderator. Thank you.
Good evening, everyone. It's my absolute pleasure to extend a hearty welcome to each one of you. And thank you, Chairman Sir and Vice Chairman of Auditing and Assurance Standard Board, Mr. Sanjeev Sir and Vishal Sir, for giving me this opportunity for being a moderator for today's webinar. As Sanjeev Sir has said that it is very extremely important topic. This aims to bring a light on various aspects associated with the auditor's responsibility for audit trail. Audit trail are detailed chronological records by which accounting, trade details, and other financial data can be traced to their source. They are valuable evidence to support audit, access control, financial statements, investigations, security, and many other functions of an organization. As we all know, it is now mandatory to have audit trail in softwares. So, as an auditor, what are our responsibility? This is what we are going to discuss. So, I would like to introduce our first speaker, Deepa ma'am. Deepa Agrawal, she is a BCom graduate, FCA hold a 13th rank all over India and 5th rank in NIRC. She is having experience of more than 22 years in serving national and multinational companies in area of auditing, accounting, corporate laws and other related matters. She has completed CPA Australia. She has completed information system audit from ICAI in 2006. She has completed certified course on IFRS of ICAI in March 2011. She is the partner of SR Batley Bowen and Associates LLP, looking for sustainability assurance, climate change, auditing, and regulatory matters. She has also worked with Technical Directorate of ICAI of around 5 years. She has assisted ICAI in various publications such as Guide on Audit Trail Accounting Standards, checklist, working papers, and guidance note on Caro, and also some related to accounting standards. She has also been working with renowned consultancy firms since 16 years. She is special invitee for accounting for AASB of ICAI and was a member of Accounting Standard Board and special invitee on Corporate Law Governance Committee of ICAI in 2019-20. She has worked extensively on publications, projects, and assurance standards. She has authored 4 publications. She is also a member of Journal Committee of Bombay Chartered Accountant Society and regularly contribute articles. She has also worked extensively on preparations of comments, guidance, presentations on Companies Bill and Companies Act 2013. So this is what about our speaker Deepa ma'am, and I would like to now invite Kishan Bansal to take this session forward. Thank you.
Thanks, Kanika. A very good evening to everyone. I welcome all the participants present today in the webinar on auditor responsibility and audit trail. I would like to thank CA Sanjeev Singhal sir, Chairman AASB. I would like to thank Anil sir. I welcome our eminent speaker, CA Nitesh Kumar More sir, who will enlighten us with this deliberation. He is a FCA and insolvency professional. He had actively worked for more than 70% of total program organized by EIRC from year 2016 to 2022. He had suggested allotment of bank audit by software in year 2013. He had started concept of phone and email helpline in 2013 when e-filing of tax audit report was introduced and served members all over the India. Under his chairmanship of different committees, EIRC came out with 20 plus references and background material. Under his chairmanship of BD committee, EIRC represented to increase college audit fees, and it had actually increased by 3 times. He has been updating 1 lakh plus members all over India from more than 12 years and has taken so many initiatives such as employment initiative, women empowerment, etc. He had spoken in over 150 seminars in EIRC and CIRC and corporate law, bank audit, code of conduct, and IBC law. So without wasting much time, I would like to invite CA Nitesh sir to enlighten us. Thank you. Over to you, Nitesh sir.
Very thank you, Chairman CA Sanjeev Singhal sir and the team for inviting me to share my views on the topic audit trail, friends. In this implementation guide on reporting, friends, this is the Gita and Ramayana as far as the audit trail is concerned. If you have any issue relating to the audit trail, the first thing the members should do is to go through the implementation guide, and I am sure that it is so comprehensive and so exhaustive that he will find the reply of each and every questions. But most of the time, and many of us are perhaps not going through the what is written in the black and white, and perhaps many times we are dependent on the seminars to disseminate the knowledge. So thank you. What is the object of the provisions of the audit trail? Friends, let us understand why the government has come out with the provisions of audit trail. Perhaps the days where in case of many small companies, the directors and the officers of the company may perhaps will be coming at the end of the year with the books of accounts and everything. Then some of the adjustments and the things we're doing which were not proper perhaps, and perhaps the provisions relating to maintenance of proper books of accounts that were not properly complied with, and to compel the companies to comply with the provisions relating to the maintenance of proper books of accounts. Friends, this provision has come perhaps. So what is the what is the provisions as far as section 128 companies are concerned? What is the provisions relating to the maintenance of books of accounts and under the Companies Act? 128(1) says every company shall prepare and keep at its registered office books of accounts and other relevant papers and financial statements of every financial year, which gives a true and fair state of affairs of the company. So that is required to be maintained, and that too on accrual basis and double entry system, friends. And the provision further states that the company shall keep such books of accounts and other relevant paper if the company is keeping. The company may keep such books of accounts and other relevant papers in electronic forms in such manner as may be prescribed. So companies were keeping the books of accounts in the electronic form, but the manners has not been prescribed, and by this basic proviso, the empowerment, the government has, the MCA has come out with the accounts rules, friends, and that is finally applicable from 1st of April 2023. So by this provision, the government, the MCA has been empowered, and that MCA has come out with the audit rules. So let us now understand whether there is any provisions in the Companies Act to maintain regular books of accounts. So you may have a Reliance company which have the infrastructure and ecosystem, and they are maintaining the books of accounts. Every day they are updating the books of accounts. But you may have some small companies. The question arises: what we were doing previously, that there's some bulk posting at the year end that were being done. But with this audit trail, if you are doing these things, if you are posting the entries at the end of year, some bulk entries of transactions are being entered in the books of accounts. So the books of accounts, the audit trail itself will reflect that these bulk entries has been made after or at the end of the financial year. That itself will have the evidence that you have not maintained proper books of accounts during the year, friends. So, in my opinion, such a situation should be avoided. Suppose you have registered office and there is an inspection today. So, what you will show in the month of say April, May, June, July, August, September, October, January, February, you won't have the proper books of accounts relating to that year, friends. So, in my opinion, bulk posting, which we are previously doing, shouldn't be done. The entries in the books of accounts, the transaction log, audit trail log will itself reflect that you have not maintained proper books of accounts, and you will be making that evidence. So, in my opinion, please avoid those situations and do not post bulk entry even in case of small companies, and the provisions relating to section 128 should be properly complied with, in my opinion, friends. Because I was getting so many queries that that maybe at the end of the quarter they want to have the say a 3 months, or that way they want to maintain. So that should also be avoided. Apart from this, if you want to make the increase of the what I said for the year end should also be equally applicable if you are posting increase at the end of the 3 months. So what is required is to maintain proper books of accounts, maybe weekly. In case of very small companies, you are having say paid up capital of 2 lakh, 5 lakh, you may be having making the increase, maybe you have making maybe weekly or fortnightly or maximum monthly, but not more than that should be acceptable. If there is an inspection, you would be in problem, and you would be itself creating the trails for those. So this is one. So then the question arises: what is the penalty for non-comply of section 128? So let us read that section itself contain that if you are not maintaining proper books of accounts under section 128, what is proper books of accounts under section 128? The books of accounts should reflect true and fair states of affairs of the company, that type of books of accounts you have to maintain. So if you are not complying, or you are not maintaining, or you are not complying any provisions, then the penalty itself is there. That is 50,000 to 5 lakh. That too for the MD, Director Finance, CFO, and the person who is responsible. So every person so if there is any non-compliance, so-called ROC will issue so-called notice to each and every person. Let us take an example of Reliance. So MD, Director, whole-time Director of Finance, CFO, and suppose General Manager of Finance, he has been interested with a charge by the board to comply with the provisions of the section. So penalty, so-called notice will be issued for each of them. So the penalty can be 5 lakh into 4. So 20 lakh can be. Let us take an example of a company where directors are 10 and there is no whole-time directors and CFOs and all these. So-called notice can be issued to all 10. So it can be 5 lakh into 10, 50 lakh. So that's the as far as the penalty section is concerned. For section 128 only, friends. Okay. Now audit trail. Audit trail are chronological records of the changes that have been made to the to data that Anika has already told this. So what it will contain? It will contain who has made the entry, who has edited, who has deleted, if any. So everything will be there. Who has done what? Then the date and time will be there. And what? Even if you have changed the narration a little bit, that also will contain what were there in the past and what is present. And if you have changed it 25 times, 25 versions of your changes will be there. Let us see how it looks like in the Tally software. So this is one. Suppose you have a data of a company. There are 2,000 entries in the software. So such screenshot, 2,000 such screenshot, friends. Who has created, when he has created, who has edited, when he has edited. That things, everything will be there. This, suppose there is a transaction of 2,000. So 2,000 will be, such a screenshot will be, you can see. So then what? The content, what is there? So what? Let us see this. You have changed the figure in this. You have changed the figure. So how it will look like? In the red, you will see. You can see that 11,000 has been changed to. So this will be there. And suppose in the next slide. So version 1, version 2. Suppose in the next, you have changed the narration. So what we are seeing in red, even if you little bit change in the narration, that change will also be there. And everything, every screenshot, that is the trail, friends. That is the content, what you have changed. What is the global scenario, friends? Whether globally audit trail provisions exist or not. India is the first country who has implemented the audit trail provisions as far as my knowledge goes. So there is no global guidance as far as audit trail provisions are there. So what has been implemented here? We have thought for this. India has thought for this. MCA has thought for this, and we have implemented this. MCA has implemented it. The government of India has implemented this. So whenever there is some new provisions come, there could be some teething problem, but we all are here to support the government so that these forward-looking reforms can be implemented in India. ICI, with its 4,000 members, has taken an oath that we will support the Indian government. We are part of the MCA. We are part of the government, and we have to forward-looking, and we have to partner in nation building We have to support the government in implementation of these provisions, friends. What is the cost of implementation of this audit trail? It can be software cost. As far as small company is concerned, there could be software cost can be less. But what about the large company? Yes, it will be very high. MNC, take the case of MNC. MNC, in case of MNC, the only the Indian business part that has to be under the audit trail, the other part not. So they perhaps have this type of situation that in a software, if you are taking that only Indian part, you have to maintain the audit trail, other not, it is not perhaps not possible. So there could be a situation. Then the server cost, as I said, that if you have edited 25 times, then 26 transactions screenshot you can see. So all this will require server space, friends. So larger server space will require after this audit trail provisions. Hardware cost, as the server space, there would be a larger hardware cost also, and so many other costs also. So in case of a small company, the cost may be less, but larger company, the overall cost will be large. And in case of MNC, they have to also think that what they will whether they will also like to make have the audit trail for other business, global business or not. That decision also has to be taken. Yes, what's the benefit? That it gives higher comfort to the stakeholder. In case of a company, the shareholders and the management, they are different. So it will give a larger comfort to the stakeholders, to the shareholders, to the auditors even when they will be auditing. We have the government also. So there will be larger degree of comfort after this audit trail provisions are concerned. As far as this after this audit trail scenario, friends. Audit trail, even Kanika has already told what is audit trail. Accounting software. What is accounting software? Accounting software is a computer program or system that enables recording, maintenance, and reporting of books of accounts and relevant ecosystem applicable to the business requirement. Please read this line. The relevant ecosystem applicable to be should also be there. Let us take an example. Tally, SAP, all these have the relevant ecosystem also applicable to the business. So these are the accounting software. But is Excel an accounting software? The answer will perhaps be no, because the relevant ecosystem is perhaps not there in the Excel. Even if somebody somehow says that no, I can maintain the books of accounts in Excel, but the audit trail, that is not there. So that has to be kept in mind. Books of accounts, very important, because something is covered in the books of accounts, and if you are maintaining in the software, you have to ensure that audit trail provisions are complied with. So that it is not exhaustive definition, friends. It is very inclusive definition. What it says that it books of accounts includes records maintained in respect of, say, receipt and money receipt and expended, and matters relating to which receipt and to which the receipt and expenditure takes place, even sales and purchase of goods and services. So as the sales are covered, so there could be a multiple software in a company. Books of accounts are maintained in an accounting package, but sales are in a different software. So that is underlying software that also should have the provision, have the feature of audit trail. Then the purchase is also covered. If you are placing in case of very small company, you are placing a purchase order by manually, or but if you are using a software for this purchase, then that feature, when you are placing, suppose you are using a Tally and you are placing an order of purchase, that should also have the feature of audit trail. assets and liability, and cost records. So underlying software that should have the feature of audit trail. So if you are EO, if you are maintaining it electronic, if you are maintaining if it impacts books of accounts, so you are maintaining the purchase order books in the tally, you are placing accordingly. That feature also have the feature of audit trail. The management will decide on the maintenance of the manner of maintenance of books of accounts that is there. The manner of books of then what this accounts rule says. This is applicable from 1st of April 2013. Every company which uses an accounting software for maintaining its books of account shall use only such accounting software which has a feature of audit trail of each and every transaction, and creating an edit log of each changes made in the books of account. So if you are any changes you are maintaining, if you are doing in the books of accounts, that too along with the dates, and ensuring that audit trail can't be disabled. So let us take an example of Tally. Prime version is there and edit version is there. Edit version. In the edit version, you can't disable this audit trail feature, but in the prime version, you can put yes or no. So you can disable this or you can enable this. So you have to report this if that feature is also there. So you have to ensure that in the edit in the software there shouldn't be that feature, and if that feature is not there, if you can enable it or disable it, then friends you have to report it. If so management, if they are maintaining books of accounts manually, yes, they can disclose the fact that the guidance note itself, the implementation guide itself says there could be a cases, friends, where subsidiaries ledger, some of the subsidiary ledger, say petty cash or some other subsidiary ledger, that is being maintained manually, but the other parts of books of accounts that are kept in the software. So that is possible. So as far as the books of accounts that are kept in the software, you have to report accordingly. And in the notes on the accounts, you can disclose this fact so that you don't have any responsibility left. If you have the audit feature for you must have the audit feature not only for the transactions but also for the database that you have to install.
Nitish, if I can come here on the previous slide, I just want to add that probably one has to look at Rule 3 also in terms of the permissibility of maintaining books of account in the manual vis-a-vis the electronic form. So the way the Rule 3 is worded, it says if the books of account are maintained in electronic mode, then it has to be, in compliance with Rule 3. So, so if the company is maintaining in its entirety the manual records, then probably it's not applicable. But if the company is maintaining in electronic mode, then it has to be as per Rule 3. So I just want to highlight this, that the company should take due cognizance of the fact that whether they are maintaining in the manual form or whether they are maintaining in electronic form, that has to be in accordance with Rule 3.
Yes.
Yeah. Thank you.
Now, requirements for auditors. So what we had, that was the accounts rules. Now I'm coming to the auditors so where we have to audit. So where we have to audit, I will cover, and we mutually decided that Geeta ji will cover the para, the draft, the draft para. She will show you that how the paras it will look like in alternate situations. But the question is where we have to report, we have to insert a para in our audit report. So that would be under section under clause J of section 143 that states that the auditor shall also state such other matters as may be prescribed. These matters are prescribed under Rule 11 of the company's Audit and Auditors Rule 2014, friends. A question arises, what will be the penalty if there is some contravention or misreporting by the auditor? There could be a DC action, disciplinary action by the ICI or NAFRA as the case may be, depending. But what is the penalty under the Companies Act for the auditors for this non-comply or misreporting under this section? Friends, the section itself doesn't contain any penalty, and there is an impression in the mind of the professionals, perhaps a few professionals, that there is perhaps no penalty. But it is not that, friends. Section 450 of the Companies Act, if there is no penalty for any section, this section will come into picture for any non-compliance of any section, friends. So, what it says, if a company or other officer of a company or any other person, so auditor or any other person is covered, friends, contravenes any provisions of the Act, rules thereunder, or any condition, restriction subject to which any approval section. So, what is the fine? Fine is 10,000. Is this only fine that the ROC will propose? The answer is no, because in case of there is an inspection in the year 2030, and they came out that for 2023-24, you have made a misleading paragraph in your audit report. So they can issue show cause for 10,000 plus 1,000 into 365 into 7 years, friends. So you can calculate what is your fees for this. What is your fees and what can be levied, and accordingly you must avoid a misleading any misleading or any mislead reporting in your audit reports, friends. This is an audit report of last say 2-3 years back. So what we are reporting there, 143.3. In our opinion, proper books of accounts as required by law has been kept by the company as far as it appears from our examination of those books of accounts. And proper books of accounts, where it has been defined? It has been defined under 128, friends. And 128 and the proviso, audit trail provision, has also been prescribed. So wherever you are making any contravening comment on the maintenance of proper books of accounts, you can also highlight here, comma, subject to your audit trail comment on para this and this, that you can include. Then where you will insert your comment under Rule 11, you can have, this is the place, and how you will report, what will be the language, that this will be covered by the PAJI in different situations, friends. Then this is requirement of Rule 11G. Rule 11G requires auditors report to state whether the company has used such accounting software for maintaining its books of accounts, which has the feature of recording audit trail facility. Same has operated throughout the year for all transactions recorded in the software. Audit trail feature has not tampered with. Audit trail has preserved by the company for the statutory period, that is requirement of record retention, that is 8 years. So suppose I'm say some of the auditor is of 80 years, or he is not compatible with the customized software in which the company maintains the books of accounts. There is a customized software in the company, and auditor is not. So can he take an opinion from the expert for commenting on this section? The answer will always be yes. The answer will always be yes. Yes, you can take the help of the expert, and already there is a guidance note on this for taking the opinion on the expert. So this is from 1st of April 2023. We all know. So this is how. This is for the underlying software. So what is happening here? That the company maintains sales record in its standalone software, and the accounting records, other accounting records, I should say, are maintained in separate software, say Tally or SAP or any other software. So this underlying software, the sales which we are recording, that should also have the feature of audit too. This also had the sales software should also have the feature of audit. Any software that maintains records of transactions that falls under the definition of books of accounts as per section 213 of the Act would be considered as accounting software for the purpose of Rule 11G. If sales are recorded in standalone software and only entries are recorded monthly into the software used to maintain the general ledger, the sales ledger should also have the audit trail feature, since sales invoices would be covered under the definition of books of accounts. So if you have a sugar factory, you have the can management software, if you have a hospital operation management software, these should also have the feature of audit trail. So this is what is there in the implementation guide also. If you are maintaining manually, you disclose the fact that books of accounts are entirely maintained manually. So that if you are that para you have to insert. So the management responsibility. Accounts rules requires that every company which uses an accounting software for maintaining its books of accounts should use only such accounting software which has the following feature: records an audit trail of each and every transaction, creating an edit log of each changes made in the books of accounts, along with the date on which such changes has been made, and ensuring that it has not been disabled. So it is the management's primary responsibility for ensuring the selection of appropriate accounting software for ensuring compliance with applicable laws and regulation, and accordingly, the management is responsible for selecting the software and implementing accounting software that may be hosted and maintained in India or outside India, or maybe on premises or on cloud. So further, a company may be using a software which is maintained on a service organization. So there could be a suppose in case of a Reliance, the payroll process that is by some other third organization. So for example, the company may have outsourced its payroll processing with a shared service center, and the shared service center may use own software to process payroll of the company. Then the auditors, then what the in this case, what the auditor will do? Auditor will can ask the management to have the access to the software of that company where the accounting payroll has been maintained, and he can have the access directly, or he can also rely on the report of the other the service organizations auditors also. Rule 11G requires auditor to report on audit trail by making a specific insertion in the audit report under the section report on other legal and regulatory requirements. In addition to the comment on whether the company is using an accounting software which has a feature of audit trail, the auditor is expected to verify the following aspects: whether audit trail feature is configurable, whether the feature has been operated throughout the year, whether all the transactions covered in the software are covered in the audit trail feature, whether audit trail audit trail preserved as per the statutory requirement of audit report retention, that is 8 years, but if the investigation is going on, then longer than 8 years may be required. Any software that maintains transactions that fall under definition of books accounts will be considered as accounting software for the purpose, for this purpose. So last year, what we have done, that is not relevant. Yes, it is applicable for all classes of company, even one person company, very small company, paid up of 1 lakh, maybe section 8 company. Yes, foreign companies also. So when the company is maintaining books of accounts manually, they have to disclose the fact. So in case of CFS, the principal auditor, he can rely on the judgment and comply with the applicable. So he can rely on the work of the subsidiaries auditors, and accordingly he can compile and report accordingly. So this we had already discussed. 128, this provides that books of accounts to be preserved by the companies for a minimum of 8 years. So you have the same 8 years is all minimum period of 8 years is also applicable for audit trail preservations also. But this is applicable from 1st April 2013. So this we have to keep in mind. For year preceding to 2023, that won't be required, because this will be applicable for future period, not for the. So audit approach, this will be covered by Deepaji. I would only like to say here that when we are opening a company, suppose in a tally, you are so that you have, after opening a company, you have to assign user IDs to each individual who are expected to access the books of accounts, or make the entries, or make some any alteration in the books of accounts, so that it can be identified that who has done what. So that is what had done by whom, and they shouldn't share this user ID and the password. That is there. So here user ID, we are audit approach will be covered by Deepaji. We had mutually discussed. This reporting part will be covered by Deepaji. So where to report the contraventions? There could be the 4 places. 11G reporting we had already seen. 43.3B proper, whether proper books of we had already seen. So 143.3H. So if there is any qualification, reservation, or adverse remark relating to books of accounts, you have to there you have to also maintain. So this is the 3rd place. And IFC reporting, if there is any material misstatement that has to be reported, that will also be the 4th places. This will be covered by Deepaji. So let us talk something for the small companies. In case of small companies, very small company, friends, suppose what is the problem? Their manpower probably are less, and perhaps the accountant is coming once in a week and maintaining and making the entries. I am talking about very small companies. I had already told that I will cover more on small and small companies also. So this is the tele laser screenshot. So there you can see that use effective date for voucher entry is generally no. So you have to make, you can make it yes, and then if you push if you put that's F2, if you push F2, then two dates will come: date of voucher and effective date. Effective date can be the date of, say, purchase, the date of the relevant date. The if he suppose the accountant is making the entry fortnightly in a 15 days, so so that the increase for the date of increase, that can be the effective date here, and voucher entry can be the present date. So in this way, the date of voucher entry will be that will be the tally with your audit trail, and effective date will also be there, and you will be maintaining the proper books of accounts that will also contain the date of the entries also and date of this audit trail also. So this can be the there is a link I am sharing in this. There is a complete video on this. So what you have to do, you have to alter voucher type, say purchase, and then press F2, and then two dates will come. This way you can do for other vouchers also, other ledgers also. So this is the complete video how to view edit log. This is the link. I think that this can be shared with the PPT, can be emailed to the participant, please. Let us discuss some of the practical questions. How to audit if they are rectified and delete entries. So there are 2000. First of all, we have to avoid these delete entries. We should that delete entries should not at all be passed. That should be passed by way of rectification. Any rectification to be made in the account shouldn't be by delete entry. It should be by rectification entry. But what you will do if for the last year the data, that some of the entries are deleted, so that you can take it is a red flag. You can't say that these entries are not part of books of accounts. So previously, if something were deleted, you were unable to access that, but now everything is there. What the delete entries contain, that is also there. So you have to analyze what was there in the delete entries, and accordingly you have to plan your audit, and you have to test sample test, and you have to consider these delete entries also, and the rectification entries. So there could be many cases when the same entries has been rectified. Suppose you are getting a UTR number at the end of the day, that you are entering in the narration. So you have got a date. You have got a books of accounts of a company for a particular year containing 2000 entries, and there are 50 delete entries. You have, first of all, you have to consider these 50 delete entries. That these are part of your books of accounts. The audit trails are there. That what these delete entries contents are there. You have to consider this, and you have to. These are the red flags also that contains some of the frauds also. So you have to consider this. This is one, and you have to consider. Maybe at times you find that you have to analyze all the 50 or 100 delete entries. You have to analyze. Then the rectified entries. So what I said, that some of the rectification entries, say for 100 rectification entries, you have inserted the UTR number. So that can be one of the reasons. So for proper reason, if there are rectification, so that way you have to consider, and that this can be the red flag only. That can't you can't say that there are delete entries. You can give the adverse opinion or any opinion. You can't. You have to analyze, and you have to take the opinion. You have to, that's it, friends. how can maintain partially or full books of accounts. And uh, uh, as I said, that these excels are not uh, is without audit trail feature. So uh, that can't be used as a as a, as as far as for maintaining the books of accounts, but to the extent of some calculations that can be used as this is allowed under the FAQ 25D, that we will see. But this spreadsheet that also have the audit trail feature. So, but that doesn't have the since these spreadsheets do not have the ecosystem. So I feel that these spreadsheets are not accounting software. So this is how I interpret as far as this spreadsheet are concerned. Yes, you can use these spreadsheet for some calculation purpose, as far as these are allowed under the FAQ 25D, which we will see later on in the some other slides. Can company import data from Excel into the accounting software? Yeah, answer would be the always yes. But when we see, we will discuss this later on in detail in 25D. So when we are signing any audit report, we are also stating that financial statements are in agreement with the books of accounts. So in case of small companies, what we were doing previously, that even we have made some adjustment at the year end and at the time of auditing. These adjustments we were doing after signing the report later on. So these things will itself reflect that you had not that books of accounts on the date of signing were not in agreement with the books of accounts. So we have to take a special care, friends. All adjustment entries must be passed in case of, especially in case of your those who are the small companies auditor, that all the entries could be passed, which we were not doing previously perhaps. So before the date of signing, you have to ensure, friends. Then the one question in case of tally, that we were splitting the company data into the 2 different years. The relevant question is when we should split the company's data into 2 years, whether we will do this on the 1st of April or on the date of signing. So for the convenience purpose only, I'm saying that we should do this after the everything after the signing or on the date of signing, after passing all the entries. Because if you split the entries on 1st of April, there could be some entries you will be passing later on that would be required at twice places. There could be some more errors also. You had made the entries, some entries there and not in here. So better you split the companies. This we are doing in Tally after this signing the report and after this making all the adjustment entries passed of the previous year. So a company came to me that what they did, that they had passed one board resolution on 2023 that they will maintain. This were a very small company of very small companies. Some of the small companies were there. 5-10 group. So some persons were having 5-10 companies. So what they did, they passed a board resolution in 2023 that they will maintain books of accounts manually from 1st of April, and then this year they had changed this again, changed to the accounting software due to the having the adequate skilled manpower. They in maintaining the manual books of accounts, they were asking that whether they have done as per the provisions. So I didn't find any contravention. Again coming to the electronic form, but they have to maintain. You have to follow the provisions, auditorial provisions that is there. Can company maintains books of accounts manually fully? That is also there in the guidance note, but some say fixed asset register or petty cash by complying this rule. What Deepaji said, that if you are doing this, then you have to disclose all this in the by way of notes of accounts also, apart from and accordingly, but audit trail para that you will audit trail reporting will be there separately. So there is a real estate group of companies having 100 companies, and they are maintaining, they have purchased one software, and they are maintaining the books of accounts of all the 100 companies into one software which has purchased in the name of one company. So my question is whether these 99 companies are not related party, and whether itself allowing this allowing the keeping of books of accounts without taking any charge in their software is also not a related party transaction. Friends, in future, you will see that income tax department will ask for this audit trail for certain transactions. This will happen. There could be a situation when the investigating in income tax department in case of survey and all this, they will examine this audit trail when the entries has been passed. So in case of cash entry, if there are backdated entries, whether they will allow this cash entries. So we must pass this cash entry and all these entries timely, and we must update our books of accounts timely. These days, these forms which were previously being approved by the all the regional offices, ROC regional offices, now this has been centralized. So in future, what these ROC will do, they will rely more on this inspection and all this, visiting the registered office, and they will see whether there would be more risky situations will be coming in the future when they will be visiting our office, and they will if there is any contamination which we are not reporting, that accordingly penalty can be levied on management as well as the auditor friends. So we have to extra care, and we shouldn't think that how the some of the members were asking how the ROC will come to know, MCA will come to know, so they can come to know by these provisions, friends. Even these income tax department or other department, EDs and all these, they can also report to the other department, friends. So there could be a situation when, in case of a small company, that some of the user ID which we have not created, but other requirements are complied with. So how to report in these situations? So these audit trail, as far as this audit trail provisions are concerned, that throughout the year, preservation and all this, that we have to check and report, and this should also we should disclose that in the audit report, that this internal control was not there, and accordingly we have to be in our audit report. How to report if user ID are created, say after a month? So for a month or 3 months, these user ID are not created, and then after these are created. So accordingly, I think that this should be disclosed in our audit report also, friends. How to report if there are some backdated entries? So these are the questions that we have to see the facts and circumstances of the case. This shouldn't be a situation that so many bulk entries are being passed quarterly or half yearly or at the year end. This shouldn't be a situation. Otherwise, there would be a situation of violation of section 128, friends. So for that part of year, you had not maintained proper books of accounts. That can be interpreted in that way, friends, and penalty can be levied. So what the NCA expect? You have taken a certificate of a company. You have a certificate of a corporate as a company. You behave like a corporate. So you shouldn't. You should properly maintain the books of accounts as per the Companies Act. friends. Let us see this fraud. The definition of fraud, friends, that any other person is also covered and omission is also covered. So in any other person, the auditor can be covered. Yes, auditor can also be covered. And omission, what you were required to do, you were required to audit by following the accounting standards of the ICI, and you have not followed. So if something mishappens, then you can also be now dragged. And what is the penalty? If the amount involved is more than 10 lakhs, so somebody has committed a fraud. But as an auditor, I can be also be covered as an any other person, and find that is non-compoundable also. So in the so there could be a compoundable penalty. So if something is compoundable, you can go to the NCLT. So in any provision, if something fine is or prosecution provision is there, so that is by or. So this is that provision is compoundable. You can go to the NCLT, ask that I am ready to pay the penalty which you decide, and this prosecution provision that can be dispensed with by the NCLT. But if it is non-compoundable, then NCLT even can't do that. So that is how it is. So this is non-compoundable. So use of spreadsheet, what it says, if something can be directly auto-fed into the accounting software with the use of the spreadsheet, that will also attract audit trail provisions. But if you are calculating something, if you are using the spreadsheet for calculating something, say for depreciation or tax liability, or the value of closing inventory, even, in my opinion, friends, you can use the spreadsheet for calculating the closing value of closing inventory also. That doesn't require the feature of audit trail, and you can put that into the accounting software. So in case of a small company, what can be the situation? A situation can be that in the accounting software, in rarest of the rarest case, very small company, they are not maintaining, they are maintaining books of accounts without inventory. And for calculation purpose, they are maintaining inventory in the spreadsheet, and they are calculating the closing stock value, and that value they are putting in the software, and perhaps with this 25D that is allowed. And that also, this spreadsheet can be used for maintenance of this fixed asset register also. Like we can use it for this, and we can put the value in the software, accounting software. We are using this, that can be used with this FAQ 25D. That has been recent insertion in this implementation guide this year, friends. So I am, friends, I am sending updates also on income tax, GST, and other relevant matters. If you want, you can WhatsApp me. With this, thank you everyone. So if there are any questions, I can take, or we can proceed with Deepaji.
Thank you, Niteshji. Kishan, would you like to ask few questions, or we can directly go to the session and take up question at the end?
Ma'am, we will take questions at the end.
Okay.
Yes.
Thank you so much, and thanks, Niteshji, for talking about the requirements extensively, sharing your experience, the practical nuances of the new provision, and how, as an auditor, we should be ready while thinking about the requirement, which is where the listed companies have already implemented it, because this is one of such requirement wherein not just the auditor has to report, the management has to take the responsibility first. So I'm thankful again to AASB for giving me another opportunity to talk about this important subject on the audit trail. I also being fortunate enough to being a part of the writing group of the, so I was part of it when the guide was prepared in 2023. So I was involved in the drafting and the FAQs as well. And I heard Niteshi when he mentioned that the FAQs and the guide put together is kind of a, it is a kind of one thing, or, will be answering all of your questions, most of your questions, which you are facing or will be facing when you are putting together this, when reporting, when you're actually putting in looking into this requirement, how the company has implemented. So I'll start with the management responsibility, and then I will talk about the the audit approach and the reporting requirement. So first, I will just want to mention about this fact that everyone should remember very clearly that this is a responsibility for the management first. So when you would have heard in the beginning, the chairman WSB also mentioned that it's already implemented and reported by the listed companies. It's a law of land, but it is important to remember that the management has a responsibility as well. So the company's account rules was amended by MCA, and therefore the requirement is on the management to ensure that this feature remains enabled throughout the financial year and records audit trail of every transaction by creating an edit log of each change made in the books of account, along with the date when such changes were made and who made such change. And it should also be ensured that audit trail cannot be disabled. So you would have seen how when Nitesh explained that you will have to report, which means the management will have to make sure that the audit trail is not disabled. And if the audit trail can be disabled at any point of time, without maintaining a log, or the unauthorized persons are able to make the changes, then the auditor's responsibility gets triggered too. So therefore, it's very important to understand the management responsibilities first in terms of identification of the records and transaction, identification of the software, what is the change in the books of account, and before we move to the auditor's reporting. So I'll just quickly share my screen while talking to you, and keep on posting your questions in the chat box when while we will kind of take this towards the end. Yeah, let me do a slideshow for you. Yeah, hope my screen is visible. Kanika, if you can confirm, or anyone else.
Visible.
Okay, thank you. So so if you look at the looking at the requirements for the so first of all, as I mentioned, that it's very important to understand that it's management responsibility, and the rule has been amended for the companies as well. And Nitesh ji also mentioned about the penal provision of the companies. So you remember that the penalty is not just on the auditor, the penalty is also on the company, on the managing director, whole-time director, CFO, or any other person of a company charged by the board with the duty of complying with the provisions of this section. So it is very, very important to understand that when as an auditor you are looking into these provision, and listed companies have already implemented, reported for this year. So there are lots of reports which are available in public domain. I have included some of those reporting in my slides, which you will see in the subsequent slides, to see how the reporting is being done for reporting in the new requirement for the audit trail. So these, the 4 slides which you will see now is more about on the requirement for the auditor. So what is the key? What is the responsibility for the auditor? So maintaining audit trail, while it's a responsibility of the management, but reporting an audit trail is a responsibility of the auditor. So MCA has issued the company's Audit and Auditors Amendment Rule 2021, and they introduced a new rule 11G, which casts responsibility on the auditor to report an audit trail by making a specific assertion in the audit report under the section report on other legal and regulatory requirements. So yes, this is the one of the unique requirement which has been added to that list. There are already existing reporting requirement. So if you remember last year, MCA mandated the reporting requirement for dividend and for reporting for ultimate beneficiaries. intermediaries and the beneficiaries. And now this is another requirement for the audit trail. So yes, your audit report is going to becoming a bit lengthy, but just keep in mind that this is something which is a requirement which is a requirement as part of the statute and is very much a part of the law, and therefore there is no choice. It is applicable to all the companies, so irrespective of the size of the company. So please make it very clear to your clients when you're talking to to whether it's a small company, whether it's a medium-sized company, whichever the size of the company, the requirement is applicable if the company is maintaining books of account in electronic mode. So as per Rule 3, if the company is maintaining books in electronic mode, then it's applicable. So now what is the responsibility of the auditor? As an auditor, you need to understand, you need to ask from the management a complete list of system and transaction relevant to the books of account with the information. You may want to have a understanding of the IT system maintained by the company, the backup on the the backup of the books of account being taken, and whether the server is located in India. So effectively, you will have to understand the entire system of maintenance of books of account and the identification of the underlying software. So any software that maintains records of transaction that fall under the definition of books of account, as per Companies Act 2013, will be considered as accounting software for this purpose. So you will have to identify, you will have to obtain the list from the management and test about its completeness or whether management has appropriately identified the software. Another very important thing which you have to keep in mind that it's not like a ICFR reporting, internal control over financial reporting, which is you do it at the end of the year. You say that it was effective and running as at the end of the financial year. However, in the audit trail, what you need to report is that it has operated throughout the year for all transactions recorded in the accounting software. So which means you will have to test, you will have to make sure through testing, through sampling, and there is a very detailed guidance given in the guide as well by looking into your procedures that whether it has been operating throughout the year, which means you will have to select samples, you will have to do the testing, and you will have to see whether the logs are available throughout the year. Now, while verifying accounting software used in maintaining the books of account, auditors should also consider the software configuration that controls enabling, disabling of the audit trail. Also assess if audit trail was enabled throughout the year. So you will have to understand who has the rights for enabling or disabling of the audit trail, who has access to the configuration, and whether management has authorized persons who has the ability to enable the audit trail or disable the audit trail or to make those changes. Any changes to the audit trail configuration during the financial year and also from the date of financial statement, but before the date of auditor's report should be made available to you for your checking to understand what kind of changes have been made, whether logs are available. Periodic review mechanism is implemented and operated by management for any changes to the audit trail configuration. Completeness and accuracy of audit trail or edit logs that are generated throughout the software functionalities or directly recorded in the underlying database. That is, what needs to be checked is whether it captures a user ID that made the change. And this will help you determine who has made the change. So if you remember the slide which Nitesh presented, that the name of the person who was recorded who is making that change. So what you need to see whether management has authorized a particular person and whether that person only has made the change. The date and time of change should be there as part of the logs, and what fields were changed by reviewing the reports or trails generated on a test basis to capture the required information or when the audit feature was disabled. So this is some of the examples given in the guide in terms of what you have to do to determine the completeness and accuracy of the audit trail or edit logs. Any testing management has performed to assess the completeness and accuracy of the audit trail. Now, why this is required? Because the management will also have to make a comment and specifically in the board's report if there is any non-compliance, because there is a responsibility of the management to make sure that the audit trail feature or the edit log feature is enabled and is in accordance with the requirements of the Companies Act. So, continuing with the audit consideration and the responsibilities of the auditor, again, as an auditor, you need to assess management identification of records and transactions where audit trail needs to be captured. So you can verify on a test basis whether the audit trail has been configured and enabled for the identified accounting software, which means once you agree with the list of the accounting software, then you will have to check on a test basis whether the audit trail feature has been configured and enabled. And wherever it's not there, you will have to report it. How to report it, I'm going to cover after the 2 or 3 slides. Then you will have to make an inquiry with the management on how they evaluated changes that are required for the maintenance of audit trail as part of changes or upgrades to the accounting software. You may also consider involving IT specialist or expert to assist in evaluation of management control and configurations in the accounting software with regard to audit trail. Again, this is not a mandatory requirement, but if you remember, there's also an auditing standard which is called SA620, which requires auditor to involve experts wherever required. So, for example, you use valuation expert, you involve actuaries. So, if you believe that it's a highly complex company, you're auditing a large company, and you need help of the IT specialist to understand the management controls or to understand the configuration, you may involve an IT specialist. But again, the responsibility remains with you. So when you're signing your audit report, it is your responsibility. The responsibility cannot be shifted to any expert here. But yes, the expert knowledge can be obtained and can be used as an audit evidence. Then the next is evaluating management policies in this regard and test controls to determine whether the feature of audit trail have been implemented and effectively operated throughout the reporting period. Because the requirement is to report. When you will even report, when you will look at the wordings of the the paragraph which you're going to include in your report, you will see that it talks about it is effectively operating throughout the year. That is something, which is talking about throughout the year. Inquire with management to understand the procedures implemented by the company to preserve the records as per the statutory record retention period. This is very, very important because you will see that this is one such requirement which will have a kind of an impact or the effect in the future years as well. And why I'm making this comment is because the requirement, when you will see, it says once the audit trail feature has been enabled, the auditor will have to report whether it has been maintained by the management as per the period for the record retention. Now, what is the period for record retention? As per section 128, the management will have to maintain the books of account for a period of 8 years. And therefore, in the first year, you may not be reporting it because it's the first year of implementation. But from the year 24-25, this is required to be reported. So the auditor may review on a sample basis the audit trail records maintained by management for each applicable year and evaluate management controls for maintenance of such records without any alteration and retrievability of logs maintained for the period of retention. Consider the report under SOC 2 or SAE 3402 covers audit trail requirement. So wherever management has involved third-party service provider, you can obtain the report in the form of SOC 2 or SA 3402. However, the service provider report should capture the audit trail requirement, should have the specific reporting on the audit trail for the period, for the entire year, which means 1st April 2023 to 31st March 24, if we are talking about March 24. So any difference in the reporting period, let's say this report only covers 9 months and it's not in line with the entire financial year, you have a responsibility to call it out, which means reporting in your audit report that either you do the work, either you test those logs, and if you cannot test those logs because that is being covered by the service provider, the guide requires you to call it out in the report. So which means as an auditor, you will have to report for a complete period of 12 months. In terms of the documentation, as you know, the thumb rule is what is not documented is not done. So for everything, not just for the audit trail, as an auditor, the work you are doing, the report you are issuing should have a basis to support, which means the underlying working papers, and you have a comprehensive standard SA 230 audit documentation. So what the guide brings out, the guide leaves it to the professional judgment of the auditor, but at the same time, it also provides that the auditor may document the work performed on audit trail such that it provides a sufficient and appropriate record of basis for auditors reporting under Rule 11G and evidence that the audit was planned and performed in accordance with this implementation guide, applicable standards in auditing, and applicable legal and regulatory requirement, which means you will have to retain as part of your working papers what samples you have obtained, You did a discussion with the management, what testing you did. If you have included a qualification or a modification on your report, what is the basis for that modification? So in nutshell, you will have to comply with the requirement of 230 as part of your audit documentation to the extent applicable. Now, key considerations for the, in terms of the management representation. So the guide also includes a very detailed, in terms of the guide also includes a very detailed representation letter, because at times it becomes very important to make sure that when you're obtaining the management representation letter for this year, you include the relevant clauses and you include the relevant management representation letter and obtain before you sign the audit report. So in the management representation letter, it is very important that the management should acknowledge its responsibility for establishing and maintaining adequate control for identifying, maintaining, controlling, and monitoring of audit trail on a consistent basis, stating that management has performed an evaluation and assessed the adequacy and effectiveness of the company's procedures for complying to the requirement prescribed for audit trail, stating management conclusion as set forth in its assessment about the adequacy and effectiveness of the company's procedure, which means the management would have to specifically state that it is complied with the provisions of the audit trail and the audit trail is effectively operating throughout the year. And if not, the management will have to call out the exceptions. So this has to be given as part of the management representation letter, stating that management has disclosed to the auditor all deficiencies in the design or operation of control maintained for audit trails identified as part of the management evaluation, describing instances where identification of fraud, if any, resulting in a material misstatement to the company's financial statement is identified while reviewing and testing the samples related to disablement of audit trail. Now, what does it mean? If there is you identify any instance where the audit trail feature has been disabled. Now, obviously, it's a red flag. You will have to make inquiries from the management to understand the reasons behind it, why it has been disabled. Was it something which means been done to make the entries in a backdate entries or not to record the logs? So this is something which, as an auditor, you should always question and ask the explanation in writing from the management. What is the reason why this has been disabled, and whether you need to carry out any additional procedures to understand, what could be the possible repercussions. The guide also includes a detailed, guidance around it. It could have an impact on the fraud scenario. So which means if there is an intentional disablement, or if the management is not able to provide you a sufficient justification, then it definitely raises a red flag for the auditor to carry out more detailed procedures. Now, there could be a situation where there's a technical glitch and it's a matter of 1 or 2 days when or a few hours. It could be depending on the situation, but you need to understand, you need to question the management to understand why there's a disablement of the audit trail facility. The management will also have to confirm as part of the representation stating whether control deficiencies identified and communicated to the audit committee in relation to the audit trail during previous engagement have been resolved. Now, why it says so? Because if, for example, you put a modification or, as part of your audit trail reporting requirement that the audit trail feature was not enabled in one of the software. If you include that modification, then what is also required that the management has to correct that, which means when you will be auditing the next year, when you will be looking at the audit trail feature for the next year, that should have been resolved. So the management will also have to state so, and also identifying any deficiencies that have not been resolved. And if the feature has still not been resolved, then they will have to identify. I would also like to mention one important point. See, the whole aspect of bringing this requirement is to make sure that there is a log of being created for every transaction. And also it is very important that the intent is that the companies should be using the software which has a feature of the audit trail. And if you have heard in the beginnings, the chairman WSB mentioned that the MCA has deferred it twice, which means MCA has given sufficient time to the companies for getting ready to make sure that the software which they are using should have the audit trail feature. And therefore, if you see any situation where the companies are not willing to move to a software which has an audit trail, then it's a non-compliance. And make sure that you as an auditor are reporting explicitly in your report. Ask the management also to put a note in the financial statement to explain why it has not been done. And in any case, there's a requirement on the companies. This is just I want to highlight while Nadeshi has already covered in detail the accounts rule and the audit rules, so I'm not going to spend much time on this, but I just want to highlight here, see, if you look at the management responsibility under account rules, it is much wider. It says the accounting software should be capable of creating an edit log of each change made in the books of account. However, if you look at the auditor's responsibility, it says that the auditor reporting responsibilities in respect of audit trail in accounting software for all transactions recorded in the software. So if you say here, it's a change made in the books of account, and here it's written all transaction recorded in the software. Now, for the purpose of audit reporting, all transaction recorded in the software would imply those transactions that result in change to the books of account. So for example, creation of a user in the accounting software is a transaction is the software, but it is not a change in the books of account. So it's not covered as part of your auditor's reporting requirement. However, if the company is adding a new journal entry or changing an existing journal entry, that will be considered as a change made in the books of account as well as a transaction recorded in the software. And this will be covered in the auditor's reporting requirement. So audit is expected to check audit trail for transaction which result in the change to the books of account. So it is important to remember this as well, and it is also part of the guide which is available for your reference. I will quickly cover the FAQs. As I mentioned, I was also involved in drafting of these FAQs as part of the AASB. So if you look at some of the very important FAQs, and I'll cover the ones which have not been covered till now. The applicability we have already discussed. It is applicable to all the companies. It is only applicable to your statutory audit report. It is not applicable for your limited review reports issued on the financial result of a listed company or any interim audit report. There is no requirement of reporting about the effective date of audit trail implementation in the company. Testing and reporting is for the entire financial year. Audit trail requirements are applicable even for accounting software maintained outside India if the company is incorporated in India. So what you need to remember, it is applicable to all the companies registered under the Companies Act 2013. Accounting software. So this is something the property, plant and equipment and intangible asset registered may be classified as an accounting software if the same provides direct and auto feed to the accounting software. So this question is also, I think, covered by Nitesh in one of the slides. And the next one also on the end user computing tools like spreadsheet may be classified as an accounting software if the same provides direct and auto feed to the accounting software. So spreadsheet is part of the books of account, but what you need to remember, if it is being used as part of your backup calculation, your computation, your defertex computation, it is not required to be looked into when commenting on the audit trail. However, if it is being used for maintaining books of account, then what you need to check whether it provides direct and auto feed to the accounting software. This is something very important to keep in mind, and it is part of your FAQs. Reliance on the IT expert, I already covered this now. So what you need to remember is that the period should be same. So when you're looking for a third party report, which is like your independent report of a service organization, the period should be same, which means covering the entire financial year. Accounting software maintained by third party organization, it is very it is very common situation where the accounting software is maintained by third-party service organization and the auditor of the company is unable to obtain sufficient and appropriate audit evidence for the full reporting period with regard to maintenance of audit trail. Then what the guide requires, then this will be considered as a non-compliance and may impact reporting and would require to be include appropriate comment under Rule 11G. So what is required here, even if the software is maintained by a third-party service organization, the company will have to make sure that they are able to give you sufficient information for you to check and comment on the existence of the edit logs. Non-compliance with the audit trail provision and modified comment on audit trail. If a company encounters technical glitches, limitations in the accounting software during any part of the financial year due to which audit trail feature remains non-functional, this will be considered as non-compliance and may impact reporting. But again, you will have to understand the facts and circumstances, talk to the management. Was it a technical glitch or was it something disabling the audit trail feature? In case audit trail feature has not been enabled since commencement of relevant financial year and only enabled at any time before the year end, then also this has to be reported. In case the accounting software maintains only log of last or latest change, then this will be considered as non-compliance. So if you look at this from every angle or aspect they have covered, to reiterate that this is a reporting requirement for the entire year. And if any portion of the year is not covered, then this has to be reported because this is a factual reporting. What is being asked by the auditor, if you look at the wording, it asks the auditor to report whether it has been operating and exists throughout the year. And if it does not exist, please mention it clearly, in which period it is not there. So one of the very important FAQs before I move to the reporting to keep in mind, and this was debated, to think about the other reporting clauses, to the other requirements in 143.3. So if you remember, there is a 143.3H requirement. So I'll just go in the, I'll explain you with the help of the illustrative reporting, which you can see on the slide. So Rule 11G requires an auditor to report based on our examination, which included test check. The company has used an accounting software for maintaining its books of account, which has a feature of recording audit trail facility. And the same has operated throughout the year for all transactions recorded in the software, except that the audit trail feature of a particular software, you will have to identify the software here, used by the company to maintain payroll records did not operate throughout the year. So now what this example talks about, that one of the software does not have the audit trail feature. Now, further, during the course of our audit, we did not come across any instance of audit trail being tampered with. Additionally, the audit trail has been preserved by the company as per statutory requirements for record retention. What you see in the bracket, ideally, this will be reported in your next year, which is 24-25. But many of the auditors have written that this is not applicable for this year. Either way, this is not applicable, and I'll show you an example in the next slide. Now, this is not the only place which will have an impact here. Now, what you also have to see is 143.3b. So if you remember 143.3b, that talks about the company has maintained proper books of account. So there is a requirement on the auditor to talk about the maintenance of proper books of account. So here, what you will have to say, you will have to report that proper books of account have been kept by the company, except for the matter stated in paragraph so-and-so reported in Rule 11G, which means there needs to be a cross-reference of Rule 11G because this is a non-compliance. So instead of repeating everything what you have already written in Rule 11G, the guide gives you an example of making a reference to the reporting in Rule 11G. And then you have another subclause, which is 143.3H. Now, what is this 143.3H? If you go to the section and look at the requirement, it says the qualification, adverse remark, reservation relating to the maintenance of account and other matters connected therewith are as stated in paragraph above on reporting under this, and paragraph below on reporting under Rule 11G. Which means if you have reported on non-compliance here, you will also have to report here. So you will have to figure out, you will have to call it out as a qualification, adverse remark, reservation, observation. Many cases I've also noticed that people are using an observation because it depends that whether it is in the nature of a qualification, adverse remark, or reservation. And you can also refer to the ICAI guidance note on 143.3H and 143.3I, which gives you sufficient guidance on what is the qualification, what is the adverse remark, and what is the reservation. So if you see, this has a tripling effect. So which after before 11G, you will talk about 143.3B, and then you will talk about 11G, and then you will talk about 143.3H. So this is something, this is something what you need to keep in mind. Some of the other FAQs, there are FAQs on the audit procedures also. So in case general IT controls are not present, then the auditor needs to assess the risk. This may pose on the audit trail configuration. However, it does not mean that you will always have a modified ICFR report. This is independent of any adverse finding regarding financial statement. If the company's accounting software produces a single report detailing all changes to the books of account and the auditor is able to obtain sufficient and appropriate audit evidence to support their reporting or audit trail, then that may be sufficient for the purpose. Other key points, it is very, very important. Reporting on audit trail is a factual reporting. Please keep in mind there's a factual reporting. Yes, you will do your test check. Yes, you will do your sample selection and everything. But whatever is missing or whatever does not exist has to be reported by the auditor. Any changes to the master data should have an audit trail. Changes made directly at the database level will impact the books of account, and hence audit trail is required to be enabled at the database level also. Audit trail record falls under the definition of books of account, which means you will have to maintain the backup of the audit trail records. This is also clarified in one of the FAQs, and such backup has to be maintained in a server physically located in India. This was an amendment made by MCA in 2022, wherein they made this requirement that the server has to be physically located in India, and daily backup has to be taken on a server physically located in India. Reporting on the audit trail would not be applicable to financial statement for the year ended December 23. So if your client follows a calendar year, it will not be applicable for December 2023. And now I will just quickly cover the reporting requirement before opening up for FAQs. So the guide gives a very well-drafted examples, and my recommendation to you, because I was part of the drafting group also, it is very, very, please follow the requirements, follow the language given in the ICA guide. These are some very, very good, well-deliberated language, and which you can use in your report in case of any, even if you're issuing a clean report, unmodified, or you are making a comment, making a qualified comment here. So there's a reporting requirement where you have the clean report. So, sorry, if you look at this example, Nitesh mentioned that you will have to do illustrative reporting in the section report and other legal and regulatory requirement, which is your 143.3 section. And here you will have to talk about, based on our examination, which included test check, the company has used an accounting software for maintaining its books of account, which has the feature of recording audit trail, edit log facility, and the same has operated throughout the year for all relevant transactions recorded in the software. Further, during the course of our audit, we did not come across any instance of audit trail feature being tampered with. Additionally, the audit trail has been preserved by the company as per the statutory requirement for record retention. So this is your unmodified reporting for a standalone financial statement, your audit report, and this will be applicable for it's an unmodified reporting. Now, what the text in bracket, you can see this reporting would be relevant from the second year, and in the first year of reporting, this sentence would not be reported upon. So this is an example of the unmodified standalone. And the next slide gives you an example of the consolidated unmodified reporting for the current year. So again, you have your SS 600, so which means as part of your group instructions, you will ask the other component auditors to report back to you for these requirements. And then basis their report, you will have to do the reporting. If you are not the component auditor. If you are the component auditor, then probably the language would require to be changed. So here it says, based on our examination, which included test check and that performed at the respective auditor. So which means here you have presuming a situation where you have a separate auditor for the subsidiary, associate and joint venture, joint operation, which are companies incorporated in India. So it is very important to remember, you don't have to get the reports for the foreign companies. So if there is a company which is not a company incorporated in India, this reporting will not be applicable. Whose financial statement have been audited under the Act, the company, subsidiary, associate, joint venture, joint operation have used an accounting software for maintaining its books of account, which has the feature of recording audit trail. And the same has operated throughout the year for all relevant transactions. And then you did not notice any instance of audit trail feature. So please make a note of here, if you are the auditor of a group, even if it's an unlisted company, and you have many companies in your group, please send the group instruction and ask them to report back to you of keeping this requirement. And if there is a modification, you will have to include the modification in your audit report. So next few slides, I will just talk about the modification. Now, this is something on the modified reporting on the standalone. I will just highlight what is the change here. So it says, except in respect of maintenance of fixed asset record, wherein the accounting software did not have the audit trail feature enabled throughout the year. So which means here the exception is on the maintenance of fixed asset record. And the audit trail feature otherwise has been operating throughout the year, except for the instances reported below. So I'll take you to the next slide, which give you more example. Now here, this is one of the example which is there in the public domain. I have picked it up from the published report, which is available in public domain. Here, the modification is on account of primarily relating to the audit trail feature not enabled at the database level or at certain application level. So if you look at here, so it says based on an examination which include test check, except for the instances mentioned below. So these two modifications are given. The company has used accounting software for maintaining its books of account, which have a feature of recording audit trail facility, and the same has operated throughout the year. Now, what are those exceptions? The first exception is the feature of recording audit trail facility was not enabled at the database level, because if you look at the guide, it requires the testing at the database level as well. To log any direct data changes for the accounting software used for maintaining the books of account relating to payroll, consolidation process, and certain non-editable fields tables of the accounting software used for maintaining general ledger. So you will have to call out the exception, what is missing, where the audit trail feature is not enabled. The second one is of the feature of recording audit trail facility was not enabled at the application layer of the accounting software relating to revenue, trade receivable, and general ledger for the period so-and-so, and relating to PPE for the period so-and-so. So the second example talks about where it is missing for a particular period. So what I'm trying to highlight here, even if it's missing for a part of the year, the expectation is for you to report. And you can get plenty of examples which are now out in the public domain. This is again another example where audit trail was not enabled for one of the database and unable to comment. So here they have called out the name of the software as I mentioned in one of the example given, included illustrative reporting included in the guide. And they have mentioned that the audit trail was not enabled in respect of some of the software. And therefore, the auditor is unable to comment whether the audit trail feature is operated throughout the year for all relevant transactions recorded in another accounting software. So again, it's a factual reporting. The auditor will have to report what is missing and for which period it is missing. This is the example for the consolidation. So as I mentioned that if you are the auditor of a group, you will issue a report on the consolidated financial statement as well. And as you do for your other reporting requirement under Rule 11, here also you will have to report on this requirement for all the components which are companies registered under the Companies Act. So if there is any modification included in any of the reports by your component, you will have to call it out. So here as an example, the group auditor is talking about exception in case of an associate, which is a company incorporated in India, whose financial statement have been audited under the Act. Based on the examination of the auditor's report of the associate, they have reported that the company has used software so-and-so, and except that no audit trail was enabled at the database level for one of the accounting software. So I think this is very, very important to keep in mind that if you have a group, then also the modification is required to be called out. And additionally, one of the auditors also reported that as proviso relating to the record retention is applicable from 1st April 23, reporting under Rule 11G on preservation of audit trail as per the statutory requirement for record retention is not applicable. So this I was referring to when I was talking, this record retention requirement is rechecked from the next year. But one of the auditors, few of the auditors have also written that this is not applicable for the current year. This is one of the example given in the guide that you can even give that information for the non-compliances in the tabular format if you know there are large number of instances. And before this, I also want to highlight, while it's not covered in the slide here, many times this question comes, whether it has an impact on your main audit report. Now, it depends on the situation. While this is a factual reporting, but this may require you to carry out additional procedures like your internal controls, whether it is an indication of the fraud or any misstatement. So depending on the your further procedures, are you convinced that this is only the feature is missing, but you are able to obtain audit evidence for all your other matters? Then probably you can issue unmodified overall report. However, a comment will be required in this section, which you have seen in the previous slide. However, if you believe that there is something else more and you need to carry out further procedures, and you believe that there is a case of a non-compliance and it may have an impact on your other matters also, then the report can be modified. The guide gives you some guidance around it. So it does not mean that once you have a modification here, automatically your report will be a modified report. So, but as an auditor, you will have to look at all the non-compliances. So like you look at the non-compliances with your Companies Act provision. This is again one of the provision being introduced in the Companies Act, and you will have to look at the repercussions on the in case of non-compliances. So next step is something what you need to remember is take an inventory of the software and used by the company. So you should talk to your companies, whether it's a small company, promoter-driven company, are they maintaining the books of account in electronic mode? And if yes, what kind of software they're using? Whether such software has an audit trail feature, identified what kind of controls being maintained by the company. You should discuss with the approach with your board or your your audit committees. You should identify the process for which trail is not possible, not feasible. Discuss in advance the reporting implications. So if you identify that some of the software does not have the audit trail feature, or the audit trail feature was enabled only during the year, then you will have to prepare those, have those discussion in advance with your with the companies to make them aware about these requirements. Enabling audit trails may not be a simple task for companies which use simple accounting software, which typically don't have an audit trail functionality, and companies may have to effect significant changes to their existing software. So many companies are already using these software with the audit trail features. So for them, this is not something a big change. But for the smaller companies, that might be a big change. So you will have to keep in mind that these are the requirements. Keep the guide and the handy with you. The guide is very, very helpful. The FAQs as well. And before I give the session back to the moderators for the questions, I just want to highlight that AASB has also formed a expert panel which provides technical support to the members with respect to the queries and auditing. So probably if you have any challenges, if you have any issues, you can even ask them. And second is to take the support from the IT expert wherever you feel there's a requirement. Audit trail requirement may not only have an implication at the transaction level, but also have an impact on other aspects of IT. For example, internal control over IT system, how to ascertain audit trail at the database level. So in that case, you may want to take a help of an expert. And that's all from my side. And probably we can take up questions. I'll stop sharing. Yeah.
Thank you so much, Deepa ma'am, for the deliberation. It was very wonderful and helpful guidance you have given. And also thank you, Nitesh sir. So we have few questions with us. I would start in case of non-profit organizations like the companies having few bank transactions, payments, and just expenses are there. So accountants are updating those entries. So is there any exemption for them?
There is no exemption. I had already discussed that even in case of 1% company, there is no exemption at scheme provision.
I think that your voice is not clearly audible.
Yeah, but I'm saying that there is no exemption for small companies, even for 1% company. So even the paid up capital is 1 lakh or 2 lakh. So there is no exemption. This we have discussed on.
Okay. Thank you. Thank you. Next question, Kishan, can you please ask?
So if stock register or fixed asset register are maintained on Excel sheet, whether in auditor report that is to be mentioned?
So 25 rules, if you go through that for some calculation purpose, they had allowed that you can use the spreadsheet without the audit trail, but however the 25C, if something is auto-paid into the software, only in that case audit trail feature must not be there. So for the calculation of the closing stock value, if you are maintaining the inventory in the calculation of inventory in the Excel, that without audit trail feature, and that as far as the accounts are concerned, you are maintaining without inventory. So value of closing inventory you will be calculating in the spreadsheet, and that value you will be putting in the accounting software that is allowed. So 25D, if you are following, that is allowed.
Yeah. So question 25 is something very important, which I just want to add to what Nadeshi said, is to understand in which situation, if you're using the spreadsheet, then, in which situation it will be applicable. But please remember, everything what you are referring to, property, plant and equipment, is part of your books of account.
Nika, next question.
Next question, is there any mandatory requirement for such audit trail in relation to AOP, BOIs and firms and small companies other than private limiteds?
So in case of a company, these are the provisions under the Companies Act. So other than companies add-on date, these provisions are not applicable. Add-on date, these are not applicable. So
Okay. Thank you, sir.
So how is the auditor to report if the audit trail did not function during any part of the year under audit due to some technical glitch?
This is again covered in one of the FAQs, and I covered it in one of the slides. The auditor will have to report factually, stating that it is not functioning for this portion of the year. What my view will be, the management should also put a detailed note in the financial statement explaining the technical glitch, and the auditor can draw reference to that note. Provided the auditor should have a discussion with the management and sufficient procedures to understand the technical glitch, and was it a technical glitch? Was it for a fairly long period of time, or was it only for a few hours or few days? So the guide has a specific questions, and it is again a factual reporting. The management should include a note also in all such cases.
Okay, my next question is regarding the sample checks. As we know, we can apply sample checks, but in reporting by the auditors, we have to mention that for all transactions. So is there some contradiction, or we should always do a check on for all transactions, cannot do sample checking?
Okay, maybe let me attempt, and Niteshi can add. Yes, the guide talks about the standards in auditing, the sampling. You will do a sample checking, but if there is anything which comes to your notice, you need to report it. So think about a large company where you can't do 100% checking. But yes, these days you have the artificial intelligence technology, you can even do 100% checking. Anything which is a non-compliance come to your notice based on your test checking, based on the sampling, has to be reported. So the guide does mention about the sampling, and the guide does refer to the standards in auditing. Niteshi, would you like to add anything here? Okay.
If the company has outsourced their accounting work, then what is the liability of the auditor with respect to audit trail?
The outsourcing, when I say outsourcing to the third party for the maintenance of books of account, then also it's a responsibility on the auditor to get the evidence from the third party. So which means the management will have a responsibility to make sure the third party reports are available, or the management should be able to share the logs and everything for auditors checking. The auditor will have the same responsibility, will have to report if the logs does not exist. And if the auditor is reporting in accordance with the requirement, then the liability should not arise. If the auditor is performing duties sufficiently of checking, and if there is an inability imposed on the auditor because the records are not available for the auditor to check, then the auditor will have to report this and also evaluate the reporting implications on the overall audit report.
Thank you, ma'am. Next question is regarding we do some closing entries after the closing of the financial year, say after 31st March. So do we need to check all those transactions which are entered after the 31st March? Depreciation entry.
So there will be situations that any additional entry are passed maybe near to the date of signing the audit report, some additional entries are passed. There could be some rectification entries also. So these can be passed. And accordingly, but you have to ensure that before the date of signing or on the date of signing, the books of accounts are in agreement with that financial statement are in agreement with the books of accounts. That we have to ensure. After signing, you can't pass. That is what we are saying. That after signing, you can't pass. But you have to pass it before, on the date of signing or before the date of signing. That is how it is.
Thank you, sir. I think I'm done with the questions. Kishan, if you have any questions, please.
Sir, if the books of account are maintained and returned up manually by the company, and then entries are made from the books of at the year end in the software, and the books of account, balance sheet, P&L account are then printed out from the software, will the auditor have to report this on the auditor report?
So the software is without audit feature.
Yeah, sir.
Yes. Otherwise, whole purpose will be what will be the purpose of this section?
Yeah, I agree.
So that in the software you are interviewing, and then you taking a printout in somebody where in one of the seminars somebody were asking that we will enter in the software and we will export in the Excel, and then we'll take a printout, whether that can be equated as a manual. So so I just found the literal meaning of what is there in the manual. So I had included that slide. So what is the meaning of manual is not defined in the Companies Act. Manually means, but in the dictionary, Oxford Dictionary, manually means something that done manually is done by hand rather than machine. So if the recycling, so something by hand that is included. So as far as this dictionary meaning is by hand. So manually, you have to take that interpretation. So you can't all these that things can't be allowed. So it will be by hand only.
Okay. So last question. If the audit trail is recorded at the back end on a server or cloud maintained outside India, then it is also required to remain accessible in India at all the time.
So if I can answer this question, if I heard correctly, so see, you will have to go to the accounts rule here. The accounts rule were amended in 2022, asking the companies to make sure that the books of account are kept in, they're kept, the backup is taken on a daily basis, and the server should be in India, and it should be, the books of account should be accessible at all times. Now, considering they have added this proviso for audit trail in your books of account section, and they have also mentioned this in the guide, that your audit trail is part of your books of account, and it's very much applies the same. So you have to read the complete section in its entirety to get that flair of what is your books of account, what is the requirement, and it has to be accessible at all times.
Thank you, Hani. Thank you, sir, for the excellent deliberation.
Thank you so much, sir. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I extend my heartiest thanks towards CA Nitesh ji and Madam Deepa Agarwal ji for their wonderful deliberation. It was really very knowledgeable. We have gained a lot through your deliberation, sir. And ma'am has also supplemented with the many other things and various other clauses. So thank you so much, ma'am, for such wonderful deliberation. And thank you so much, Nitesh ji, for sparing your valuable time and enlighten all of us on various intricacies on audit trail. I also thank Kishan Bansal ji and Kanika Garg ji for wonderfully moderating today's webinar and sparing their valuable time. I also thanks all the participants of today's webinar. So thank you so much, everyone, for the wonderful, knowledgeable session. Thank you so much.
Thank you, Anil ji. Thanks, everyone.
All of you for the nice coordination and having us and organizing this seminar. Thank you so much.
Thank you, Nitesh. Thanks, everyone. Thanks for your participation and thanks for your contribution. Thank you.
Thank you all. Thank you. Bye.
All.
Thank you. Bye-bye.